Hello and thanks for tuning in. I'm Daniel Kovach, and today we're going to be discussing the Quantguy cryptocurrency indicators. In previous tutorials we discussed the momentum indicators and also how to set the indicators up. If you didn't get a chance to check out these tutorials, links are provided in the description. As we discussed in the original tutorial, you can subscribe to these indicators at quantguy.net. They come in a package including the momentum indicators, the reversal indicator, and these crypto-specific indicators that we're going to discuss here. Without further ado, let's get started. First, an obligatory legal disclaimer that trading can be dangerous, and this tutorial is intended for informational purposes only. The crypto-specific indicators we're going to discuss here are the Altcoin Index and the Crypto Spread Indicator. The Altcoin Index is a weighted sum of the top altcoins by market cap, much like a stock index. Since the market capitalization changes often, these values are updated weekly. The second indicator that we'll discuss here is the Crypto Spread Indicator. This calculates the returns from investing in Bitcoin versus the altcoins in the Altcoin Index. Positive values mean that Bitcoin is providing better returns, whereas negative values mean that altcoins are providing better returns. Peaks in the indicator may be interpreted as trading signals. To trade this, we have to understand the dichotomy between Bitcoins and the altcoins. Typically, capital flows back and forth between Bitcoin and the altcoins. We saw this a lot last year in late 2017. Capital flow typically depends on who is providing better returns at the time, Bitcoin or the altcoins. The exception is when we have fear, uncertainty, or doubt, and this could happen for many reasons, such as regulations, exchange hacks, or threats of crypto bans from various nations. In these cases, or when the FUD passes, the altcoin index and Bitcoin may correlate. This will be confirmed by a flat reading in the crypto spread indicator. In other words, it'll be somewhere around zero. In terms of using these indicators for actual trading, they can be used to identify when to take profits in existing positions or used to identify potential entry opportunities. When the crypto spread indicator peaks above zero, you may want to consider taking profit in Bitcoin. When it peaks below zero, you may want to consider taking profit in altcoin positions. We can use the crypto spread indicator to look for entry opportunities in the following ways. If it peaks above zero, this means that Bitcoin is currently providing better returns, which means that altcoins might be priced more competitively. On the other hand, if the spread indicator is below zero and peaks, that means that altcoins are providing better returns and we may get a better deal with Bitcoin. Of course, we note that at peaks, each may continue to rally respectively. We're simply looking for optimal entries over many trades, not individual ones. So let's take a look at some actual examples of using this in trading. In the following, we'll consider trading Bitcoin and Ethereum. The reason why we chose Ethereum is because it's one of the major components of the altcoin index. But feel free to test this strategy out against other altcoins. In the first example, we'll simply take a look at how the crypto spread indicator can give us an idea of when it might be good to take profits in Bitcoin. In this example, notice how peaks in the crypto spread indicator either correspond to high points in Bitcoin or peaks where it fell drastically afterwards. Either way, you can see where it might be a good idea to take profits at these peaks. In the next example, we'll look for peaks to the downside or valleys to determine when it might be a good idea to take profits in Ethereum. As you can see, valleys or low points in the crypto spread indicator correspond with places that either the price of Ethereum peaks or it inflects for a bit. Either way, these might be good places to take profit. In this example, we'll show how a peak in the crypto spread indicator tells us that it might be okay to take profits from BTC and look for buying opportunities in Ethereum. As you can see, the peak in the crypto spread indicator corresponds to a peak in the price of Bitcoin. It might be a good idea to take profits here. On the other hand, notice that the same peak in the crypto spread indicator also corresponds with a dip in the price of Ethereum. It might be a good idea to enter a position here. Finally, in this example, we'll show how a valley tells us it might be a good idea to take profit in Ethereum and look for buying opportunities in Bitcoin. Here is one such example where we see a valley in the crypto spread indicator. This corresponds with a location at which Ethereum rallied and gave pause for a second. Again, this might be a good place to take some profits. Correspondingly, that same valley indicated a location at which Bitcoin was having some trouble, and we see, subsequently, it rallied further. In this case, it indeed was a good idea to take some profits from Ethereum and put them in Bitcoin. That's about all for today. Thanks again for watching. If you have any questions or comments, you know what to do. Also, if you could, please don't forget to like and subscribe.